here we are. Let's get going. May 31st, the last day of May, a month that went by very quickly, especially if you were trying to chase AI or some of the big tech. It looked like it was just running away from everybody, right? That's kind of the joke I have for today, which is really interesting. We're going to share my opinion, and I'm going to read yours, and we're going to share some trades, and it's going to be great. Just take responsibility for the outcome. You guys get it. But this is an absolute separation of markets. It's really interesting just to feel the sentiment differences. It's almost political how diverse and how, I should say not diverse, but how opposite these markets are. Let's just jump to sentiment here. It's almost panic buying in tech. And I haven't seen this in a while. We've talked about a blow off top. We're going to talk about it again. I've been mentioning of it yesterday, Corey, on last week. And we're getting it. We're getting this blow off top in the Qs and this big tech stuff. It's really interesting to see. Neutral in all other sectors. Awaiting the debt ceiling maybe, just kind of hanging out. Some weakness in the diamonds. Expectations of a slowing economy in in energy and utilities, manufacturing. I shouldn't say, excuse me, materials. And materials manufacturing actually had an uptick. So that's kind of where we're at. There's a lot of money being put to work against economic slowdown, and I believe it's in the expansion of tech and the AI and the next hot topic. There's also a lot of reservists, a lot of bearishness out there when it comes to some of the energy demands and expectations of what companies will do. I mean, you guys have seen Deere, Caterpillar's one that I want to look at today. Mosaic, geez, there's a few, anything to do with that, slowing down, expecting a demand shortage. So we're slowing. It's going to be pretty interesting to see who wins. And yes, folks, it eventually will be a winner or a loser, but I'm not sure where things are going. Seeing a little bit of slipping going on with the cryptocurrencies of the last little bit. So that might be a telltale sign. But economic data over the last couple of weeks. Some things I had to go back through and check the calendars. But check this out. Unemployment claims last week were less, which is expansion. New home sales were higher. Durable goods orders was higher. Services PMI was higher. The PCE came in a little hotter than the Fed wanted to see. JOLTS home jobs openings today, I'll show you that in a second, higher. Jobs are still being offered. Now, whether they're being filled or not, we'll see. We do have the ADP employment tomorrow. So all of a sudden, hey, this soft landing is turning into more like, I think that's more of an economic expansion. I don't think we're even slowing. So it's going to be really interesting. This is, once again, my opinion. We'll see what happens as we get going. Let's see. Let's jump into our trades. They're still great. Now the bull side, folks, I was trying my best not to put anything big tech, anything over expanded, everything high or extended. And we do this class together every week, folks. And I know that you're looking for trades and I look for trades, but it is so amazing to me that there's literally a handful of companies that are creating these moves higher. Anytime the markets don't fall apart or move sideways or move higher, it's seriously a handful of companies. On the bear side, everything is just showing some weakness. So it is an absolute polar opposite going on in the markets, and it's the larger companies that seem to be really bullying the markets higher. And I like to use the word bullying because that's basically what it is. When one company is worth more than an index and it goes higher, then, let's talk about rising tides raises all boats. Well, what about a tsunami? You know what I mean? It's just get out of the way. All right, there we go. So let's see what we're doing here. I didn't get a chance to do all the bear trades because actually I want to go through all of them. And you can see I only have little three chart windows over there. So we're going to go live on those. But let's take a look at what I've got on the bull side. This is Spotify. We talked about this a few weeks ago, and I still like it. It's one of those darlings. It's communications. It's tech. And once again, whether people are interested in it or not, it might be getting purchased as on accident for all I know. The amount of money being thrown into big tech and technology right now, people might accidentally be buying this thing. Regardless of it, that rising tide is definitely moving this boat higher. But it's not really breaking out anywhere. This has been on the bull watch. It's still on the bull watch. But I maybe let's turn it up or turn it down to maybe a diagonal spread or something a little bit more sideways to up on Spotify. So here's ETNB. Another thing I'm trying to find. This is in healthcare. It's biotech. You guys brought this up last week, I believe. Nope. It was, I have it written down here, 2, 3 weeks ago. Anyways, it was a little while ago. But it's holding in there pretty good. I do like the pivot point that it set last week. It's hard, folks, because when we come out of a holiday, we only have 2 days to work with, and they're going to be super volatile. I did expect some serious follow through from Friday, thinking that, oh, geez, anybody after that surge on Friday that didn't get in is going to be freaking out on Saturday, Sunday, and then Monday, and then hovering over the buy button come Tuesday morning. And we did get it initially, but the markets did pull back quite a bit. So I'm wondering if this is going to be indeed that blow off top. Let's get some lines going on this one. I want to get a little bit more specific. Spotify was pretty obvious. It was just kind of a straight up high base. But this is more of an ascending triangle pattern. You can see the head fakes this thing is put in. So you're feeling a little reluctant here to go ahead and buy it. A couple things about this. The stock price is pretty decent if you wanted to play something like the $18. Just buy the shares straight up, and then you don't have to worry about volatility, time decay. If you really want to hold off, and I'm talking to a lot of bears out there, you're going to see if these markets can at least sustain. We get a debt deal, which we will. I should say a debt deal that people like. And then maybe we break out of it. You go buy it more like towards the 19 area. That's fine. You could do something if you wanted to play options on this, sideways to up, a calendar spread, diagonal spread, leverage yourself out a little bit. But then you got to play the volatility game and stuff like that. But the chart looks good. I do like it. And let's move on to the sideways. Now, SLG was one that I didn't talk about 2 weeks ago, or was it last week? And it's been on. We've had three. We've had Delta, we've had Wayside, and we've had SLG. And I've got SLG and Wayside. Delta, if you guys want to look at it, let me know. But it looks like it's broken out and it's kind of holding higher, so it's a little bit more glass half full. But here's SLG. This thing's doing really nicely. It's still in the sideways range. I was surprised it didn't really participate in some of that volatility. We did see Toll Brothers that was on our bull watch, and I didn't put it on because it had earnings and it beat and it went up. Let me know if you want to look at it. I can pull it up. But it's starting to pull back, and I'm starting to see a lot of that. A lot of things that are missing numbers and then shooting higher because they're tech, things that are doing good. But most anything outside of big tech just isn't doing well. It's not holding in there. It's getting sold into. So we still have this range here at about 21, 24. You could open it up to 20, 24, and it's placed sideways, but it's been doing really well for a while. So great work, and hopefully a few of you guys are in it. Now, for some of you guys that are in Wayside, or Wayfair, excuse me, you probably were kind of gritting your teeth or, getting a little worried because we talked about this little pop-up range, but it's been super tight for quite a while. This thing has been on and off. We've been talking about this for some time. Hey, if you want to open up to the 40, you want to open to 30, it looks like it's trying to respect that after a little blip higher yesterday. Just got caught in maybe this surge upwards in the markets. It's consumer. It's internet retail, so it does have a connection to tech in some point, but it's more of the services side of things, not so much like the structural that people are looking for, like AI and all that fun stuff. So it's still looking like it wants to hang in there. So anybody that's freaking out yesterday, I hope you didn't sell it. Stick with your guns. Position size for max loss. If you've got the 40, 35 butterfly, you're still sweet. If you've got a 40, 45, 30, 25 condor, you're still fine. Just make sure when these do go, they go pretty hard. So it's looking really good right now, and it's still holding in. But I wanted to show it because it is blipped up a little bit. And it looked like it tests that upper side. Okay, so our next is, this is going to be from last week. Yeah, so let's go to the live markets, and let's go to our lists for the bear side. And we'll start with whoever's out on our list. Let me scroll back up to get it. And, this is right in line with Brett. Brett here wants to look at FOXA. And guess what, Brett? I've got FOXA as well. It was on my list from last week, and I carried it over. So let's take a look at it. And talk to Brett about his question, or he may have a position. Yep, he's got a position. Brett's got a 32.5 June 16th put. I'm going to zoom back out a little bit because I like to play with a little bit of support resistance levels. And we'll draw some lines here. There's your first obvious one here at about $30. And if that's 31, 30.25. Down here a little bit lower. So he's got the straight put. I didn't like this little hiccup, but then again, that's what the markets did. But what I do like about it, and now I'm going to erase this and zoom in, is it did not, I should say, it's hanging on to its 20-day moving average. You can see that if I zoom in a little bit. So it's almost like a tiny little bear rally. So sideways to down on this, sure, I absolutely like it. I think we're going to carry it forward from last week to this week. So awesome. I'm glad that somebody's in it because I do like it from last week and it's holding there pretty good. Thanks, Brett, as well as whoever else brought it to us, right? Let's get into RTX. Raytheon Industries, beautiful one that we talked about last week that was starting to slip and break lower. Let me go in a little bit more. See, right at that area where I want to be able to draw support and resistance so you guys can see what I'm talking about. There it is. So 94 right through here. So it started to slip, broke that 96 very comfortably and confidently, and then now a little bit of a hiccup. What's really cool about this, take a look at the participation parts here. This didn't go up. Everything else did. Everyone else had that huge Friday surge, and in the following into Tuesday after the holiday, this didn't even try. So I do love it. I think it's great. Hopefully somebody out there is bearish on it. If not, we can do it for here. So let's move on to our next trade. This is AGCO, and it is another bear trade here. Let's get into a little bit of a zoom, and you'll see that it did break the 115 mark, and it is moving lower right about this area here. Okay, and then it just decided to slide down, hit about the 110, and it is moving a little bit up. Here's this 110. It looks like it's moving lower. I do like the breakdown. I do think it looks good. Once again, industrials, farm, and heavy construction machinery. Ouch. If you guys seen any of those, they are just getting smushed. So awesome job. Let's see if we can't take advantage of it moving further. Who we got next? Of course, we got Caterpillar. I see Cameron said, hey, Cat. He's long the June 210 put. Short leg expired Friday. Looking at selling another, our June 200 put. Excellent. Wonderful. I like this as well. I do like John Deere. I like all of it. I like Mosaic. I like anything in this industrials and farm, heavy construction, chemicals. I just like shorting them all. This one's really cool because it actually does have kind of a setup for anybody that's not in one yet, as it is absolutely breaking that 210 support level today. If you wanted to go a little bit lower than that, we go to that candle, you can see it's right at it, so it's moving lower. So it's a beautiful descending triangle pattern. I like your outlook on that, Cameron. The 210, looking to do a 200. That's great. Biting us off in chunks because it is expensive stock. It does cost money and it adds up. So excellent. Let's see if anybody else has comments on it. Okay, nope, good. Let's move to CF. So, I mean, for my bears out there, we talk a lot about, hey, trade the markets in front of you. I don't feel bullish. I don't want to go long. Well, look at all these shorts that have been working out for us for weeks. Weeks and weeks and weeks. So, yes, my bears can get their fill. Good move to the downside. Broke down on Friday where everything else went up. Basic materials, it's in the right sectors. Everything looks good. Continuing to move lower. I don't know what else to say about it. Diagonal spread, puts. It's just a matter of time. If we indeed see a blow off top and maybe the Qs really start to fall apart here in the next little bit, or we don't get the debt ceiling that we want, these will just continue to bleed lower. I'm not sure where there'd be a point to where they might bounce, maybe some short covering, but I don't know where they're going to flip around and just go higher. It's going to take something globally to change that, or economically, especially if the Fed's going to continue to have to keep their foot down. We'll see. Okay, let's get to steel. This was brought up last week. Let me look. Yep, last week. And it's rolling over beautifully. Like it, like it, like it. We were thinking about breaking this floor here, and it looks like it took a little bit of a breath before it did. You know what, guys? Let me zoom in a little closer. I could just imagine some people squinting at their screen, and I'd feel bad about that. So, all right. So here's the floor we discussed, and this was last week, thinking that, hey, let's see if it can break below that, and it just had a hiccup. Just took a little bit of that Friday gap up here, you can see, and then Tuesday, Wednesday, it's on its way back down. So it's a beautiful, excellent, great looking trade to get into. If you're already into it, awesome. Just sit back and see what happens. Follow it. A couple more. I know I've got. Oh, there's COLB. A couple of financials. Columbia and then USB. And these things have just been being hurt for quite some time. It's funny because the SPY is a lot of financials in there, but it's not really hurting. You'll see it here in a second. So I liked this $20 level here. It looks like it rolled up that little shooting or gravestone doji, and it's starting to roll back down. Easy target here at about 18, just over 18 in the short term. Or you could try to play it a little longer if you wanted to open it up. I'm totally fine with it either way. Cool stuff. All right. And the last one that I have, USB, or that we'll talk about, I should say you have. These are your lists. That's why I love this class. Rolling over as well, bleeding a little bit slower, but to diagonalize this, it's got that beautiful gravestone doji. And it looks like it just might bleed off slowly to that 28 mark. So diagonal, spread this, open it up any way you want. Be patient with it. Slow play. All these bears you can slow play if you feel like it. Okay, that's the list that I wanted to chat about for this week. We'll get to yours in a minute, but let's finish up where we're at. Before that, let's see. Okay, I'm just reading through the comments. Excellent. Thanks, guys. Okay. So we'll just go ahead and jump straight back into it. Get into the sector analysis here. And so far, the performance is slightly bearish. This is 2 days. Whenever I pull this chart, it's usually 3 days. We got the holiday, so it's actually only 2 days. But it doesn't make a difference. We can get the gist of it. So overall, let's just get into the charts. You guys saw that oil was down a whole bunch and gold was up just a little bit, about 1.25%. The SPY is in a pullback, and it's a pullback from a breakout of an ascending triangle pattern. So, I mean, I could draw a thicker line here, but it's bullish. It's bullish. I don't know what else to say. It's bullish. I got the ability to do the end of day yesterday, and I was saying is if I could see price action stay above that 420 mark, I would move my monthly outlook a little bit more bullish, or my weekly, one of them definitely, but it did not do that. So now it's just in another pullback. We've seen this before, but based on where we came from yesterday, I would expect a bounce somewhere below the 415, right around maybe the 412.50, somewhere right in this area. A little bit higher than the 410, just to show that it's going to show some resilience and at least take me from a +2 to a +1, or slightly 0 to +1, something like that. So we'll see where this day ends. And we're actually where the rest of the week goes, to tell you the truth. That's kind of where I'm at with that. So here's the diamonds. Different story. This is the glass half empty area. This is energy, utilities, materials, worries of global slowing, which we're getting. We're getting things slowing down, a little more contraction. It's just the U.S. tech is just going nuts. That's about it. This, however, really isn't. That's a pretty ominous pivot point, especially if we continue lower, because now we didn't even reach this upper channel. Sorry, folks, I didn't draw it perfectly, but you guys who have Bollinger Bands will get this. Or you could draw some channel trend lines, or even revisit that 50-day moving average. Another thing that we did get for you little super technical nerds is a bear crossover right there with the 20 over the 50. So this is painting an absolute different story. And then here, it's just as dangerous. To me, you've got the Dow falling apart, and then you've got the Qs doing this. This move here is absolutely dangerous. This volume, I know, I'd like to see it a little higher, something like this. Talk about exactly what I said yesterday, where last time we saw volume that was substantial with a little bit of a surge that pulled it away from its moving averages. We had basically a month and a half of a slow bleed to the downside, right? I don't believe we get this. I think we get something a lot more like that. And it could be because of, the Fed's going to keep their foot down. Some of these companies did miss numbers and project lower and just got bought off the bottom for I don't know what reason. So this is just as dangerous to the bull side as buying the diamonds to me. Well, like I said, I talked about a volcano. I'm going to talk about a freight train this time. This little bit of a hiccup yesterday in today's action looks like, that's the end. I'm going to short the crap out of it. I have seen way too many times it blip up to something like this right after a little bit of a head fake, squeeze out those last bears, get all the shorts to cover, and then it'll fall. So it's not done. We're watching, I said volcano. We're watching the volcano erupt. So let's sit back and wait until it finishes before we start to do anything too counterintuitive. All right, there's my soapbox. You're welcome. So let's get into the economic data. I already showed you guys, or I told you earlier what I've seen, a little bit of expansion going on in some of the things over the last week or so. Here's that JOLTS job openings report. The expectations was for a decline of 9.4, and it actually went up to 10.1. That's a huge move. Now, I've had this conversation with a lot of traders. Well, that means the job openings, if there's more openings, that means there's less people filling it. Interesting. Well, that means, yeah, sure, that would be a little bit of contraction. But of the employers, if the companies are desperately hiring, that means that the demand for their product is super high, which shows expansion. So there's two ways to look at it. People are not getting the job that they want. Maybe they're being selective with it. But if companies are asking for help, it's because they're growing, which is good and bad. Just take it for what you want, right? So that's what I saw up until today. We did have the bank holiday. We had the holiday, so nothing on Monday. Now, I am going to be interested to maybe cast an ear on this or see what happens, because the beige book is also a pretty interesting thing where the Fed comes out and talks about what's on their docket and what they're looking at, what they're focusing at. I would be surprised if he doesn't make mention of that PCE number that we saw last week, because it was a little bit hotter than expected, and make mention of it. So for the rest of the week, we have the ADP non-farm employment change. I think this one's a little bit more intensive than the JOLTS, but if the JOLTS is higher, I imagine this would be a little higher. Maybe this comes in a little bit lower, so on and so forth. They have some revisions of it going on. Other than that, the unemployment rate would be something to take a look at, although it should be pretty much in line because we haven't seen increases in unemployment claims. And there it is right there. So two big ones tomorrow, and then maybe a little bit to listen to when it comes to what the Fed talks about with the beige book. But it's kind of been put aside, at least for anybody interested in big tech, because they're just freaking out over AI. It's this, I mean, I've seen people chasing the bus down the road that's already overloaded. It's almost euphoric. It's crazy. All right, so let's take a look at what you guys are thinking. Let's pull the class here. You know I like to do our polls for our outlook. Let's go market direction for the week, as always, and then we'll move it over to the month. Right. See how you guys are feeling out there. Bull, bear, sideways. And we'll share it. It looks like we are at 38% 0, 38% minus 1, 25% plus 1. I'm going to say that's pretty much, oh gosh, minus 0.5. But there are inklings you can see here of 25% of plus 1. So depending on how many of you voted out there, 94%, that's going to be 0 to slightly bearish. Okay, that's in the shorter term. So let's do the longer term here. There it is. And see what you think about this one. Okay, we got that same 94% vote. I'm going to go ahead and close the poll. Let's share it. 25% plus 2, 25% plus 1, 25% 0. 50% negative 1. That's tough because it goes all the way to plus 2 there. So I'm going to take that as a 0. 0, right? Right? You got 6% of the negative 2. That because there's 25% of that plus 2, but I mean that could be skewed. I don't know how many people are out here today. We got about 20 of us today. Okay. All right, we'll call it a 0. 0. Yeah, let's call it a 0. All right. Thanks, guys. Appreciate it. And let's move over to me. Oh, cool. It was the monthly outlook I was discussing. So this pullback here had to knock this down from a plus 1 to a 0. If this sustained itself for 1 or 2 more days, I absolutely could have gone to a plus 2. I would have left this as a plus 1 for the week. And the reason being is because even if it stayed above that 420 resistance that I was talking about on yesterday's end of day, I would still think it's consolidating. So I wouldn't be a plus 2 or plus 3 on the week. But overall, if it can consolidate up there, then I'd be a lot more bullish if it would consolidate for the breakout to the upside. This is charting, folks. This isn't how I feel about the economy and how I feel about what's going on and I feel about politics. This is just the charts. So I'm pretty close to in line with you guys. All right, great. Thank you so much. Let's get into our sector analysis. And then we'll figure out what's going on for the rest of the, summarize. We'll go out and take a look at some trades. So first off, there it is for the week. And this is from Wednesday to Wednesday, excluding one trading day. It's just absolutely one-sided. 5.34% technology. Nothing even came close. Nothing was actually even green. So think about that. Oh, these markets are bullish. They're bullish. We talk about the charts. They're bullish. Just like where? It's in one spot. And this is a really good example of it. So let's take a look at these spots. There's your tech. And it isn't, I said, and I do believe this, tech's been gangbusters forever. It actually sat on its hands for quite a while in the early spring. It really did. And it was a little bit of a blip up here, and I think that was when the CPI came in low and the Fed said something about lowering a percentage of raising in May. Then we had a little bit of a pullback. But this move is absolutely euphoric. This is the last ditch effort. This could be the last person to buy, to make sure you don't mess out on that great AI stuff, things of that nature. So very euphoric. Once again, I say it one more time, it's dangerous up here to trade, period, up or down. So let's get into energy here, and it's exactly the opposite, but it's not as extended. This is uniform. Beautiful crossover at this point. Bear rally in between the moving averages, descending highs, and we got a little bit of a descending channel here. I mean, my target is definitely below the lows that we set here in March, and that is slow played, and it has been working. Energy's been on our list a few times for some bears. So let's figure it out here. Debt ceiling remains political, financial focus. That's it. So if you're into politics and you're worried about finances and you're worried about interest rate changes and the debt ceiling and how that can impact Social Security and student loans, that was also on and off the table, that's your focus. Every other psychopath out there, it's just large tech, buy it. That's it. Anybody that doesn't care about any of that, it's just, you can't get into, it almost feels like a Reddit stock, the large tech. It reminds me of GameStop. That's kind of what it's saying. So it's the bullish driver for these markets. So extension in tech warrants is the strongest move lower. I kept that from last week. Remember that rubber band will snap. Sentiment, fear of missing out in tech. Everything else is a little bit reserved, a little bit neutral everywhere else, a little bit worried about maybe some economic, at least slowing into the summer and things of that nature. So Fed might not be done yet. I kept that from last week. Economic data showing expansion in some key areas. I'm going to just keep an ear out or read an article that pops out. I'm lazy. I'll find out if there's any sort of mention of what the Fed says about the beige book today. And if not, I'll just kick it away, whatever, and just take a peek at that ADP tomorrow and the unemployment, ADP employment and the unemployment claims. That's all I've got for you. Let's go out and take a look at some of these trades you guys are posting, and we'll see what's out there. Let me go back up. Cool. We already talked about Foxa. Okay. On Felix, yeah, hopefully the top-down approach, it is difficult to apply at the moment. Felix, have you ever experienced anything like this? And the answer is absolutely I have. I've experienced markets like this, bifurcation. It was more in the Dow outperforming the NASDAQ and the S&P for the longest time. And they're usually at tops. Always at tops. Always at some sort of correctional action that is coming. I've seen the Qs lead it before. I've seen markets like this behave just before, I shouldn't say the bubble burst, because that came out of nowhere. It was just Enron just goes bankrupt, and then all of a sudden peel away the onion and we fell apart. Which was interesting because that last bank that we just saw last month, I was like, oh no, here we go again. But it seemed to just get out of the way. But the move in tech is very familiar. It's very euphoric. We refer to it as a blow off top. So yes, Felix, it's something to keep an eye on. So, oh yeah, okay, right with that. And I've talked about this. This is Intel. This is one that missed the bandwagon on the AI chain, missed their numbers, didn't say they were doing very well, but take a look at the last 3 days. Right? Take a look at those last 3 days. There's probably no real rhyme or reason. It could just be blanket shares being purchased in all tech, or Intel could be part of it. Well, Intel, it's a semiconductor, so maybe people are after AMD and they're after Qualcomm and they're after all these other ones, And so when they buy the ETF, this just has to get purchased along with it. This happens often. So we'll see. Yeah, and just you got to grin and bear it. I guess what we're hearing here, and I haven't really read too deep, but Felix has got a trade in here to the bear side, and it's just ripping with him. And of course, it's going to mess with you. But keep in mind, this thing is still within its parameters. There's a lot of these. I mean, today doesn't look very good, but they could easily just come right back down. We've seen it before. So position size for max loss, and believe in what you did the first place, and see what happens. All right, Dan has STLA. Okay. Close below the 200-day moving average. Let's take a look at this. By the way, good work on the Bud trade, the Anheuser-Busch Budweiser trade. I'll pull it up if you want to see it, but since we've been talking about it, folks, it's gone straight down. So anybody that made a mistake to the bear side made money on that. Good work. Watching to close below the 200-day, looking at a put diagonal, 15.17. Sure, absolutely. Let me write that down. Sure, I actually like it today. And yeah, I guess it's got to close there. These are tough because whenever they're sponsored from overseas stuff, it's funny because Budweiser went back to Germany, right? So you get these gaps, every single day gaps, because it trades on another exchange. This is from the Netherlands. So it's definitely trading in the Euro exchange or a European exchange, maybe the FTSE. Okay, but it is actually confirming below support. You could even draw the 15.5. So green lights there. If you want to see it go a little lower, that's cool. And I like the strikes. 15.17 makes nice and deep. Sell pretty much at the money. Let this thing see what it's going to do. And very nice. Thanks, Dan. Let's get to our next. Oh, Justin. All right, Justin. Justin's going to open up the first gorilla. Apple. Right? Just moving up. Moving on up. Okay. Big shot up here. You've got, it looks like a call butterfly. Is that right? Let's see. Are we targeting it to 185? Okay. All right. So, playing the euphoric trend, seeing if it can continue to shoot higher. It is a 180, 185, 190 call butterfly for the 16th of June. We'll take everything off it hits the target, which is easy to do. This risk reward is going to be high, super high. He's out of the money. He'll be profitable even somewhere up in there. I'm not sure exactly what you paid for it, but it's not going to take much to be super profitable. You have June. So if it does this, understand your risk reward should allow you, if you're like me, to sit through this thing, right? It is, gosh, never mind, June starts already. But you have 3 weeks. You've got, in essence, about 3 weeks for this to come back up. So be super patient. You are playing on overextension. However, if the volcano continues to erupt and it continues to squeeze bears, this is probably the right trade to be in. I'm not mad at it at all. Let's go ahead and write it down. What I like about things like this, guys, and this is great for anybody who hasn't been on this class, is if you have a risk reward that is 6 to 1, 5 to 1, even 3 to 1 or higher, and you know you're playing the momentum and you feel you're at a top, it's okay. It's okay to play tops to the upside and say, look, if it rolls over today, I'm losing $100 or whatever, $200. But if it gets to 185, I make 2,000. I'm okay with that. What I'm not okay with is somebody that's like, hey, I'm going to short it today, because that's where you get smashed. I'm going to go ahead and sell it at 180, expect it to go to 175 by June. That's where you can get hurt. I'd rather have you play the momentum, even though it's extended, with a high reward, low risk, than try to guess when these things are going to roll over. Trust me, we got plenty of bears. Okay. Caterpillar. Did we talk about Caterpillar? We did. But Cameron has a position in it, so I'll pull it up one more time. Sorry, Cameron. I should have brought it up. Did I bring it up? I can't remember. No, I did. I already did. Just the 210, 200. See, guys? I'm trying to keep track of this thing live. I do like that. I'm going to put Caterpillar back down on the bear. Here's BAH. It's an industrial that is really moving counter. Ah, okay. So back to Felix. You've been trading for a while. Have you ever seen experiences? Have you ever seen markets like this? Yes, I've seen this too. What? What? Industrials? Consulting services? What? What's going on here? All right. So the first thing you always do is it's just one of these anomalies. Always do this, and this is just Finviz. Go anywhere you want, please. Just the days. Go through and read every single article you can. It looks like they beat their revenues. I'm just reading these headlines. You can go deeper in all this stuff. I would not be surprised to say, hey, we are an industrial company that's getting into AI. Okay, that's a joke. It looks to me it's nothing just shy of just numbers. So go ahead and follow it, because what you can see is, hey, this has had a huge move to the upside conveniently at the same time everything else does. Is this in tandem with it, or is this an anomaly separate? And it sounds to me like it's its numbers. But then you got to realize, is $100 too high for that? Am I chasing it at this point? It's really difficult when you get moves like this. So do a whole lot of fundamental research, see what you can do, and if you still believe in it, then you go back to the chart. So let's go ahead and chart this real quick. Well, what it's done, and I don't like the way things happen, because I'm a rubber band guy. Absolutely. If it goes that high that fast, there's nothing to keep it from falling back down that fast. Even strong stocks. In fact, I'll give you a great example of that here in a second. So this is a beautiful breakout. I do like that it's above its average. I would wait for this thing to establish an area here where it trades. Make sure it's good and happy above that 98 level, or 98.50, whatever you want to call it. Then trade it diagonally. This is good. This is volumes dropping out. Everybody in the world that wanted to buy it's already in it. So now you're left with the people that are on the fence or don't really care, have come across it saying, this looks like an outperformer in an industry that's getting smashed. So I wouldn't play it any stronger than something sideways if it can stay above this point. There's your technical analysis. Now here's a great example, as rubber bands do have to pull back no matter what you're doing. This is AI. Oops, this is AI, and I loved it because it's AI is the ticker symbol. C3.ai Inc. So let me go ahead and move this last move away, and look what this chart looks like. About right there. Okay, so we'll zoom in a little bit more. There we go. This is Chart GPT. This is what started everything. This is why I got phone calls to my house about my kids. Please don't use Chart GPT to write their book reports, things of that nature, right? It became, wow, this is really cool. But it did this, and it absolutely snapped back. It did this, snapped back. Did this, snapped back. And then it started to fall. This is right about where I bought it, right there. Yeah, that's right. I didn't make money on this one. But it started to extend itself again. Now I'm going to move it forward. Let me erase the pins because they're going to be irrelevant. I'm just going to scroll this thing forward. Bop. And it just bounced right back up again. I'm pretty sure this is an inside day. This is a bearish engulf, or excuse me, a harami, bearish harami, pregnant bear, where it's going to, yes, eventually snap back. So it's the snapbacks, even in something that's such in demand, that will hurt us. So just make sure it can sustain that level before we go bullish. Boy, that was a huge circle. Sorry, folks. I wanted to get that point across, because you're going to come across a lot of these over the next couple of weeks. Thanks, Dan. So here's 3M. Cameron, 3M, industrials, conglomerates, beautiful, rolling over, beautiful breakdown through 100 last week, rolling further down, no brainer, out of favor. Nobody likes the gigantic staples anymore, right? Philip Morris is another one that's been on our list. I was going to show, I think I was going to pull it up, but I think it's almost, there's really no real area to get into it right now. Yeah, it's just free falling. I guess it's at a support level here if you guys wanted to see if that 89 or 90 starts to break. Looks like it is. What's another one that's been on our bear watch? Mosaic. We're just trying to catch a falling knife here, folks. That's all this is these, everything's, I mean, it's bearish. Everything is completely selling off but tech, and it's hard because we have to trade our charts. So, but hey, if you're trading these charts, they're down. Toll Brothers, okay. Felix, this is good. Long Toll Brothers, because this was on our bull watch list, and it was very bullish, and it's great. It looks like it's pulling back a little bit. That's what happens. I think this had its news. Let's scroll down here. It had its earnings. Pops up into buy range. Oh, NVIDIA. I love how NVIDIA just is attached to everything here. Yep. Looks like it did. It had its numbers. Did well. And you got people taking profits. But it's within its pattern. Just stick with this. It's above its 20-day moving average. It's within its pattern. It's just pulling back. So keep an eye on this around the 66. Actually, you don't have to really worry until about 65. It can pull all the way back to its 50-day moving or 20-day moving average. I think you're okay. Yeah. And Felix is aware of it. He's like, hey, it's a bit down, but it could be an opportunity for other people for the bull side. Of course it could. It could. Toll Brothers is a residential construction, and we saw new home sales tick higher. I don't see home prices coming down. In fact, they did tick up from between March and April? January, February, March. Between February and March, or was it March and April? I saw an uptick in home prices. That was months ago. But hey, if your new homes are going up, they're going up. And these guys are a home manufacturer, and they beat their numbers. So I'll put that down on the bull. We'll carry that forward. Brett, there we go. Here's our first political. I love it. Ever since Nancy Pelosi executed her shares, Apple's gone up. There it is. I love it. Thanks, Brett. That's a fun one. See? Take it for what you will. But that's what we don't trade off of. But it is fun to talk about. All right, guys. Thanks so much. Let me type these up, and then I'll cut you loose. And you can watch these euphoric markets just jump all over the place. Or you can go ahead and watch the Senate and the House scream and yell at each other. That's always fun. Or you can just go outside and bounce a hammer off your head. It's pretty much the same thing to me. All right, not a lot to look at, but boy, we're carrying over a ton of trades from week to week to week, and I love to see it because they're all so great. They're amazing. So here's our list, folks. We got Apple, Toll Brothers, STL, Caterpillar, 3M, anything in that sector, anything in those utilities. One last question. What do you think about BBY right now? Okay, we could jump back real quick and take a look at it. Is it BBNY? Would you consider this a bearish opportunity? And that's one of those stay-at-homes. Or I think it was a Reddit stock. Let me go ahead and here, I'll stop this real quick. You guys, hopefully you've written that down. Let's just take a look at BBBY real fun. Just for fun. Since we're here. Oh, Best Buy. No, I'm sorry. I thought it was Bed Bath & Beyond. Best Buy. Yeah, sure. Was target move day after earnings and then since been declining with declining volume as well. Would you consider this a bearish opportunity? Sure. Yes. Sure. I've got my opinion on brick and mortar. I truly do. I made a big stink or a silly little thing about GameStop. It's just everything's online, everything's ordered online, everything gets shipped to you and returned online. And these brick and mortars cost a ton of money to have stuff. You go in and walk and buy a TV set. You can get a TV set at Costco for $700 that would have cost you $3,000 literally 2 months ago or a month ago. So I don't know. It just depends on where it is. And this isn't really participating. It's a huge, huge company, but it's not participating. So on the bear side of things, sure, wait for this to break its floor. It'll probably revisit the 68. I'll put it up on the bear list. One last bear. That's fun. Let's do it. Here, let me type it in. Best Buy. I used to love that store. I was there all the time. All the time when I was a little bit younger. But now, Amazon's around. Geez, Costco's around. I don't think I've been in a Best Buy for 3-4 years. All right, let's see. There we go. I added it to the list. One last one there. Thanks, Brett. Okay, guys, as always, thank you for participation. Great work out there. Keep it up. Let us know what you need. And we'll talk soon. All right, folks. See ya.